Hit record. Hello, welcome to the Erik Williamson Show. This is episode number 13, and I have my guest, Kim Butler. She has over 30 years of experiences helping investors and business owners create financial freedom through non-traditional strategies. And glad to have her on the show. She reached out to me. She definitely want to talk to my audience. I'm super excited, so grateful to meet her. And also, just to throw out the disclaimer, this podcast is for entertainment purposes only. This is not financial, legal, or tax advice or services. I'm not a licensed financial advisor. Always do your own research and consult with the licensed financial professional, tax professional, or legal before making any decisions. So the disclaimer out of the way, Miss Butler, if you can introduce yourself, tell me a little bit about yourself, and thank you for coming on to the show.
Absolutely, Erik. It's a joy to share the wisdom of a journey that's been over 30 years in helping people with their personal finances. And today I do that through books and podcasts and a lot of educational material, blogs, videos, etc., that enable people to get results. And I find that the biggest thing that people can get results with is cash flow control. So I know we'll get to talk about that. That'll be part of our fun discussion. And I've been working remotely since the internet began. I've always had a nationwide practice helping mostly young families get all of their finances in order. And my parents were teachers. I grew up on a farm. I started milking cows at about fourth grade. And so I've always had money to deal with because I sold the milk and sold the cows and just dealt with all of that type of thing that happens on a farm. And so graduated from college with an English degree and just fell into finance right away because of some friends and absolutely love it.
That's great, and definitely that farm life. And it's actually something I aspire to have is to own a farm. So actually, I can go vacation and go work on a farm because I know a lot of I've interviewed a lot of farmers. They say it's a special connection you get with the animals in farming and the hard work that gets to you have to wake up early in the morning and get the farm going. So that's pretty awesome that you have that background.
Well, today we have alpacas. So a little different than a milk cow, but definitely still some farm animals to keep track of.
Okay, great. Well, tell me about what you've been doing with the non-traditional strategies for financial freedom, for your clients or for investors and business owners.
Well, it's interesting the use of that word. So, people will say the word traditional or typical or non-traditional. And so I'll define what I mean by that. So obviously, here in America, we've been dealing with money in our lives for centuries. And what I find is that there are some very old school ways of cash flow control and utilizing products that have been around for centuries, like whole life insurance, to really build up the foundation of somebody's actual wealth. And I don't consider these investments at all. And like you said in the disclaimer, I'm not licensed at all, so I'm not selling any product. But saving as a verb and storing savings as a noun are the least spoken about items in the personal finance landscape. And it's because everybody wants to talk about investments, right? Those are the sexy, fun things to talk about. But the fact is, especially for young families starting out, even for entrepreneurs as they start to build their businesses up, the importance of cash flow is critical. And we sleep at night as human beings because of our emergency fund. So cash flow, that's the savings as a verb, storing cash for emergencies, the savings as a noun. But then, good heavens, you don't want to keep focusing on emergencies forever. So you want to start to build an opportunity fund. And that's where the difference lies.
Opportunity fund, I like that. And actually, I learned from Tony Robbins, you want to have multiple funds. You want to have a security fund just to cover your basics, and then your financial freedom, and then, like you said, a wealth fund, your abundance fund, basically the lifestyle that you want to live and make sure you have enough money to do that. So tell me a little bit about what products or what type of investments that can do that for people to the best of your knowledge that you would that you've done for your clients.
Well, I'm a big believer that people should invest in themselves first. So that's why that emergency fund is so critical, because you can't really do anything if you're not sleeping well at night and your health is good and you're learning all the time. In today's world, a lot of people won't go to college. It's not going to be the default environment that it has been in the past. And so investing in yourself and learning how you get results like the Colby profile is $55. It's one of my most favorite investments because it helps people understand how they get results. And then that applies to relationships. It applies to whatever it is that you're doing in the marketplace, whether it's a business or a job, you name it. So I think that's an important investment. And then other things like protection. I mean, we don't call insurance investments, but if you don't have health insurance and life insurance and disability insurance in place, it's very difficult to go out into the marketplace and do a good job. So, yes, I could talk to you about real estate and stocks and crypto and all of that, but truly investing in yourself is the best starting place.
Yeah, I think Warren Buffett was the one that coined that phrase. The best investment you can make in yourself. Like when he made the investment in the Dale Carnegie course on public speaking, he said communication is pretty much the number one investment you can make into yourself is communication. So I'm glad that you said that investing in yourself is huge. I'm sure you're an avid book reader, but I had a question for you is, what is your favorite finance book that you would recommend for my audience to read?
Oh, The Richest Man from Babylon is one of my favorites.
Oh, that book. I was just in Philippines last month and I was just reading that book. I was just
Yep.
reading The Richest Man in Babylon. That is the great. And what is the number one lesson you take from that book that you definitely recommend people do? Because I know I have mine on that book because I read that book many times.
Yes. Well, I think it's the importance of saving. Again, the act of putting money away a little bit at a time consistently. And nobody else in the marketplace is talking about this. So to me, that lesson is driven home very clearly in that book. What was your favorite part?
How is mine too? Saving 10%. So in the book it says save 10%. If your income, no matter how small your income is, make sure you save 10%. And I know that's been a key to my success and having emergency fund and having money to invest is saving that 10% and making it automatic too. That's the other key is making it automatic. So you don't even have to think about it because if you have to think about it, most likely you're not going to do it.
Right. Yep. Well, that cash flow control and having a structure, like you said, the automation plus a structure that's really going to drive that behavior is so important. And it's so much better than budgeting, which the statistics show that budgeting doesn't really ever get anybody any results past, the first month or two. And so we have a very specific structure that we recommend to people to get that savings habit going and to build momentum so that it's motivating, not frustrating.
Yeah, that's great. I'm glad it's automatic because that's the key to a lot of things. If it's automatic and out of sight, out of mind, but you do check on it every once in a while, it's gonna grow. So, tell me about the one thing we talked about earlier before the call is uh participating whole life, or is it just traditional whole life? What whole life product are you talking about?
So
For
participating whole life, like from companies of the Mass Mutual sort or Guardian or New York Life or Penn Mutual, AUL, One America, those types of companies offer that centuries old product that's called whole life. Very boring, very effective.
yeah, and I'm actually licensed in life and health. So I used to sell term insurance. I used to sell IULs, Index Universal Life. I never sold whole life, but I am a believer in whole life because especially participating. Can you tell me a little bit of how that works? Because I have tried to explain it to some people, they may not understand it. Sometimes I'm able to explain it and they do understand. But can you explain how the dividend works for the policy owner? How does it work? So
Sure.
that way our listeners can understand.
So these mutual companies are a lot like a credit union. They exist for the policyholder, and every year they pay a dividend. And most of the mutual companies, again, Mass Mutual, New York Life, Guardian, Penn Mutual, One America, those are all good examples, have paid a dividend every single year for well over 100 years. And while nobody knows what's going to happen in the future, those dividends have a nice, consistent structure and payment schedule so that we can be very confident in the savings aspect of whole life insurance. So, life insurance has a death benefit. That's what pays when you die. But the permanent products that are guaranteed to be there your entire life have something called cash value. And it's just like another savings account. So people store savings at a bank or a credit union, and clients store savings at a life insurance company in the form of cash value. Again, it's not an investment. It is something that is very foundational because death is a guaranteed event. So we want to insure for that. But living a long time is what's going to happen to most people. And so you can actually utilize the law of actuarial science and let that whole life policy benefit for your entire life. I actually have a book that I've written. It's on Amazon. You can get it on Kindle or Audibles, however you like to incorporate your books. And it's called Live Your Life Insurance. And I go over a variety of case studies for how people have utilized whole life during their whole life.
Sounds great. And you know, if you can email me that, that'd be great. I'd be more than happy to put that book in the show notes so that my audience can purchase the book. So if you can send me the title, the link on Amazon, so I can put that in the show notes, I really appreciate that. Because I'm an avid book reader myself, reading books. I heard the phrase, the person that cannot read has no advantage over somebody that does not read.
Mm.
So, so if you're not reading, basically you're no better than somebody who can't read.
Yeah, that's well said. And with audibles today, there's really no excuse at all.
No, no, no. And actually, you know what I've heard someone done is they actually like to get the book and then listen to Audible while they read it.
Yep, I've heard
So
that too.
so basically you have a hard time reading, you can actually listen to the Audible while you're reading and get the double comprehension of the audio and the visual as
Yep.
well. So, but yeah, I'll definitely put that in the show notes, the title of the book. I do recommend buying it, just because life insurance, I believe, is a great product. I have it myself. I own a policy myself, and I do recommend people get it. And then, but yeah, but so my question to you is, with the participating whole life, I've done some research myself. Basically, there's some policies where you can borrow against the cash value, but the dividends still pay on the original cash value. So not on the deducted amount based on the policy loan. So if you can go over the policy loan, because this is important for people to understand, because the tax benefits of a policy loan, you can go over that as well, because that's a beauty of whole life policies with life insurance, and that's why I own a policy myself. So
Well, I'll first say that term insurance is an equally important type of policy because people want to insure their human life value, which is about 15 to 30 times income or one times gross worth, not net worth, gross worth. So I'll give you an example on the whole life. Let's say that you've built up over $100,000 of cash value and you find an opportunity that's $60,000, 60, and you want to borrow against the 100,000 So the 60,000 that you get in your hands is actually the insurance company's money. And you're going to go do your real estate deal with that. And let's say that the insurance company's charging you 6% and your real estate deal is 8%. So now you've got an amazing opportunity. Your cost of funds is 6%. You have opportunity at 8% for the $60,000. While at the same time, the $100,000 is still earning the dividends from the insurance company, typically around 4% net these days. That's after the cost of the death benefit, after commissions, after the cost of running the mutual company. As I said earlier, if you own life insurance from a mutual company, you're an owner of the company, like a credit union. So you want to pay the loan back. There's a lot of misinformation out there about people saying that you don't have to pay those loans back. That's true if you're 90 years old, but if you're in your younger years, you want to be paying that loan back with the investment gains that you're getting. And then at some point, that investment will probably pay off and you'll pay the whole loan back. So you literally can borrow against it, pay it back, borrow against it again, pay it back again, and just keep going on that cycle, utilizing the insurance company's money all along the way, while your money stays put in that cash value and continues to grow.
That's a great point. And you know, you sound like a true expert on life insurance, because my experience with life insurance agents is they're kind of biased. They're either all whole life, all term, all IUL. And me as an agent, as I used to work for Primerica, World Financial Group, and other life insurance companies in my past, I don't work for them now, is I believe all policies have their place.
Yeah.
They all have their place. Term insurance has their place, whole life has their place. And also you can do combination. You don't just have to do whole life. You can do term and whole life, or you can have a term rider on your whole life policy. So you can do combination. You can have more than one policy. You can have IUL, you can have a term life, you can have variable life. You can go crazy. But yeah, that's a great point. And so what is it that you found people hit critical mass in a whole life policy? Like how long does it take? Because I know there's a concept out there. I forgot the author of the book, Be Your Own Bank, where you can use your life insurance like you own the bank, like it's your own bank, because you can borrow against it and use it for investments or to borrow for your car, things like that. Um, what do you think is a accumulation phase on a normal payment schedule, so it doesn't hit endowment? Um, for a client, how long? Like, is it 10 years, 15 years, 5 years? Or like, if you were to buy a
Yeah,
policy, how long does it take before you can actually benefit from it
it
in
can
your?
absolutely happen in the first 2 or 3 years. And I always recommend that people consider it their emergency fund first. So, like in my earlier example, if your emergency fund is $50,000, you want to fund it for as many years as it takes to get to the 50,000. And then you want to keep funding it to get to the 150,000 so you can go do your 100K investment deals. So the ability is really very flexible based on age and cash flow capability and that kind of thing. But people can start to utilize it as early as the third year or so, sometimes even faster than that. It depends. But again, you want to work with somebody that's got experience in the space. Our family owns over 19 policies. And we built a portfolio of policies, just like people build a portfolio of crypto or real estate or stocks or whatever their thing is. And so you learn a few things after seeing that happen over the 30 years and helping hundreds of people all across the country in that space.
That's great. A portfolio of life insurance policies. I never actually heard of that. So that's actually new for me. I thought I knew a lot, but you know what? That's the great thing about doing this podcast and meeting people is you learn something new every day. So that's great. Thank you for sharing that. And now my question is, I'm actually in this boat. Uh, how does someone get a life insurance policy when their health is not that great? So, for example,
Mm.
for me, my health is no longer that great. I have one policy. I keep it the best I can, so that way, because I know that it's hard for me to get another policy because of my health. How do people, what alternatives that are out there, unless they can get a whole life, but if they can't, what alternatives would you recommend someone do if they can't get whole life policies because of their health?
You can own insurance on your spouse and on your significant other, if that's the relationship, on children, on grandchildren, on parents, on business partners. All of those people in your life have insurable interests. The only group that you cannot own insurance on are nieces and nephews, so, or cousins, unless you're in business with them. So again, all it takes is doing a real estate deal together or something like that, and then you're in business. But it's very common for spouses and children and grandchildren to have insurance owned by the older generation.
Wow, thank you for sharing that. That's definitely something I'm about to look into. Talk to my spouse. I thought about that, but yeah, because there's a lot of people out there when I was selling insurance that did not qualify because of their health. Uh, you know, that's something that some people don't take for granted. That's a story I always share to people. And personal stories say, hey, some people say, hey, I don't need a policy right now. I said, great. Well, you may not want it right now, but just so you know, your health can change. You can be healthy today, but you can get sick tomorrow,
Yeah.
and you may not get a policy. And it's in your best interest to get a policy for you and your family to protect your family.
Agreed.
Yeah, so that's great. Well, I'm learning so much. Definitely gonna listen to this podcast after I'm done. Take some notes. But yeah, whole life is great. Participating whole life. Um, well, I'll have one question is how do you manage your policy when you're unemployed? So I know for some people, participating whole life premium can range from $50 to 500 a month. Uh, so how do people manage their policies and keep them in force while they're unemployed? Because there's actually a lot of unemployed people right now uh, in America. I think there's more jobs than I mean, there's less jobs than there are people who are unemployed. So what do you recommend to them how to keep their policies in force while they're unemployed?
Yeah, it's a great question. And you mentioned up to 500. I mean, a whole life policy's premium could be 5,000 a month. It's just all dependent on the family's level of the game that they're playing. So it's very important to fund the policy the best that you can, as consistently as you can. And if you cannot, you can actually borrow against the cash value to keep funding it. So just like we talked about the loan for an investment, you can literally recycle the money for a period of time by borrowing against the cash value, paying the premium, which will cause the cash value to rise, and create a loan. And then you can do that again and again and again. So again, you don't want to do that forever and ever, but for 2 or 3 years while you sort out the employment structure or find a job that you can create in the form of a business. It's called an automatic premium loan. And especially if you're in the third, fourth, fifth year of the policy or later, it's very easy to facilitate that. The insurance companies offer it right internally. You don't even have to do anything, just ask for it, and that will solve the problem.
Great, thank you for touching that. That is very important, especially during these times of unemployment and mass layoffs. And a lot of people don't realize too that your policy at work is actually can be transferable to your personal when you quit. Uh,
Correct.
it's not always the case. Some policies don't do that, but for me, I was able to do that. And
Yeah.
if you can touch on that a little bit more, because sometimes jobs offer whole life policies. So again, if you don't have good health, you can actually get a whole life policy through your job if they
Yeah.
offer it.
You absolutely can. Group insurance is another form, and then sometimes those policies can be separated out and purchased by the individual. I think it's very company specific, not only the employer company, but the insurance company. And frankly, it's not an area that I have a lot of expertise in. So I would just encourage people to ask their human resource department if that's something that can be done.
Great, great. I'm glad you said that. And I do have a couple more questions. But my biggest question I've had of all that I've been wanting to ask you this whole time since you first mentioned me is alpaca farmer. Can you tell me a little bit about that? I mean, that I don't know. Like, can you imagine being at a party? What do you do for a living? Well, I'm an alpaca farmer.
Yep. Yep. It's a real thing. So we have just a small herd of alpacas, and we get them shorn every year, and the fiber gets turned into scarves or into rugs. And they look like they're from Walt Disney. They're funny little animals. These are not llamas. People get confused sometimes. They're alpacas. And we live in East Texas and wanted the agriculture exemption. So alpacas it was.
Wow, wow, that's a great story. Alpaca. I mean, alpaca and life insurance.
Both of them very sustainable.
Do you put jerseys of the company life insurance company's name on your alpacas? That advertise, for your
Well,
business.
here's an additional fun fact. You can actually buy life insurance on alpacas.
Really?
Yes.
Life insurance and alpacas. Well, can,
Yes.
can you actually talk about that? Because you never know who may be listening. Maybe they're an alpaca farmer themselves. So if you can talk, actually, this would be kind of fun to listen to.
Sure.
How's that work?
Well, it's done in the marine industry, the same place that insures any exotic animal like a racehorse or something like that. What's unfortunate is it is just term insurance. I wish that there was whole life on alpacas. That would make way more sense because they do have a life expectancy of about 20 years. But
Oh,
what's really
wow.
interesting is the nature of all of their fiber is done so well that they're often heirloom things that a family would pass from generation to generation, like a rug or a scarf or a sweater. And so it's kind of fun because obviously life insurance goes from generation to generation. And so the alpaca fiber does as well. And it's something that is just a special part of our family's environment. And then I like to send alpaca scarves to our clients as gifts.
Wow, that's great. Well, thank you for sharing that. Um, but yeah, so if you can just touch base, how people can reach out to you, um, where to find you, and like I said, you'll email me some of your stuff, how to reach out to you, so I can put that in the show notes. So that way, if someone can't write, if they're listening in their car, they can't write this stuff down. They
Right.
can just look at the show notes. But yeah, if you can just share that real quick, how to get a hold of you, things like that, and go from there.
Well, I'm on all the social channels. So, whatever your preferred method is there. And then the best place is at prosperitythinkers.com. That's my main website. So, that's prosperitythinkers.com.
Okay, thank you so much for sharing that. And Ms. Butler, thank you so much for coming on the Erik Williamson Show. I am so happy and grateful that I met you. And just to go over the disclaimer again, this podcast is for entertainment purposes only. This is not financial, legal, or tax advice or services. I'm not a licensed financial advisor. Always use your own research consult with a licensed financial professional, tax professional, legal professional before making any decisions. With that, this is the Erik Williamson Show. Thank you so much, Ms. Butler. And like I said, you can find her on those avenues and also through the show notes. So thank you so much.